Hey guys, hope you are all having a fantastic day. The SEC Chicago Twitter profile has lost their minds, and now they are making statements that appear to be against meme stock retail investors. I have a lot to say about what the SEC's latest statements and what they mean for us. We have quite a bit to go over today, so let's get started. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. The account for SEC Chicago has been making a series of tweets that have grown a lot of unrest on social media. It began yesterday when the account made the following statement, and I quote, "The SEC can suspend trading in a security if it demonstrates that the action is in the public interest and necessary to protect investors." Before we even begin to rage over this, the Twitter handle provided a link to the investor.gov website where it explains in more detail what they mean. Federal securities laws generally allow the SEC to suspend trading in any stock for up to 10 business days. The SEC may suspend trading in a stock when the Commission believes that a suspension is required to protect investors and the public interest. Keep this in mind, because it's going to be very important in a couple minutes. The circumstances that would lead to the Commission suspending trading would be a lack of current, accurate or adequate information about a company, uncertainty about the accuracy of publicly available information about the company's current operational status, and questions about trading in the stock, which include trading by insiders, potential market manipulators, and the ability to clear and settle transactions in the stock. The SEC acknowledges they would not announce that it's working on a suspension, as it is a confidential thing to maintain the effectiveness of any related investigation taking place. In regards to that 10-day trading suspension on a particular stock, the SEC states they will not comment publicly on the status of a company when the 10-day suspension period ends. I find the timing of this tweet incredibly weird. The SEC can suspend trading in a security if it demonstrates that the actions is in the public interest and necessary to protect investors, and this is where the crux of the problem begins, because the whole notion of protecting investors could easily be used as an excuse to try to help hedge funds. You see, the problem lies in that a great portion of the world's pension funds are put together in investment vehicles. I have talked about this in my morning videos too. So when the SEC says protect investors, they aren't exclusively talking about retail normies gambling money away. They are referring to the pensions of police officers, nurses, teachers, firefighters, and all the millions of government agency employees. What the SEC could potentially do is try to shut down trading for a stock so that hedge funds can attempt to do something if their collapse is imminent, because under the guise of the law and the way it's written, they could excuse this by saying they are protecting the pensions funds. Wall Street loves to gamble with these funds. I have made videos on this already, and when things hit the ceiling, you can bet 100% hedge funds are going to plead their case to the SEC to help them out because, as they will frame it, a bunch of online retail manipulators are trying to evoke a squeeze that will hurt millions of public workers. They aren't going to talk about how they gambled and risked the pensions of everyone because they were greedy. They are going to frame it as us being the villains trying to manipulate the market to our favor. I have no doubt they will do this, and with the clear outline of the SEC's imperative to protect investors while being vague as to who exactly they are protecting here, since it sure as hell isn't retail traders but the assets owned and gambled by Wall Street, I think they are within their power to take away the buy and sell button, but that doesn't take away the squeeze at all. You see, the SEC cannot sell your shares and nor can brokers or any other institution. So they will halt trading, and who knows what hedge funds might do, but they can't cover without us selling, and a brief look through Reddit and Twitter suggests that no one wants to sell anything right now. Everyone intends on holding, and if this were to happen, it would put hedge funds and the SEC in hot water. Keep in mind, there are huge banking and financial institutions holding meme stocks as well. It isn't just retail traders who they would be screwing over. Renaissance Technologies, the best performing hedge fund of all time, has more than tripled their amount of AMC holdings. Do you think the best and one of the most powerful hedge funds are going to sit by while shorters try to get their way? This is much bigger than people think, and nobody is going to sell. The SEC might throw a towel for hedge funds to remedy the situation if it all comes down crumbling, but they are going to have to answer for all they do in the end with all their holdings. Nothing changes. The only thing that is noteworthy here is the SEC's seemingly out of nowhere tweet regarding this incredibly hot topic. They haven't said anything new that we didn't know, so don't get all crazy about the situation, but stay woke too. If it would have been a one-off tweet, I wouldn't be all skeptical, but the SEC Chicago Twitter account made another weird tweet. This one saying, and I quote, "What happens when a fund liquidates? And who decides to liquidate it, and how are investors notified?" Let me begin by answering these questions. Fund liquidation occurs when a fund closes down its operations completely, selling off their assets. Fund liquidations may occur for different reasons, such as lack of investor interest, a decline in assets under management, poor performance, or most importantly, overexposure of risk which retail traders took advantage of and know they are stuck holding an incrementally growing bag of leverage. The decision to liquidate a fund depends on state corporate or trust law. A vote by shareholders can be necessary to close a fund, but most funds will require a vote by the board of directors and trustees. Funny enough, investors aren't notified of liquidation until the fund liquidation itself has been approved. All investors will be notified, but depending on the state law, it could be a while. The protections for investors are incredibly poor and everything is set to benefit the favor of the fund. Again, this changes nothing, but the topic is incredibly sensitive and it's really weird for the SEC Chicago Twitter handle to be posting back-to-back tweets about this. It honestly makes me just want to buy some more shares. Today we had yet another volatile bout of trading. The S&P 500 fell 1.2%, and that's a good thing considering it went as low as 2.8% earlier in the day. Right now, in the after hours, it is trading near a loss of 2% for the day after an abrupt fall in price. It is down over 9.2% from its all-time high in January 3rd. The Dow Jones ended 0.2% down, though it is almost 1 full percent down in the after hours as of me making this video. Nasdaq ended the day shedding off 2.3%, with a poor after-hours performance taking it as low as 4% for the day. Higher inflation rates are hurting businesses and consumers, and deteriorating trust and confidence in the markets. Investors think the Fed will be too aggressive in their remedy or that they could be too late to salvage the situation. Everyone is awaiting tomorrow's hearing. We did have earnings from Microsoft, who posted stronger than expected results for the previous quarter. This should have bumped up the market, but with all major indexes crashing down, this bullish report has done nothing. We also saw Bitcoin bounce up quite a bit today, but just like the market, it started falling back down. Today's seemingly strong performance means nothing as we are set to test some of the support we have built these past couple of days. Nothing new from GameStop nor AMC, they are just getting hit really hard today. Hold strong and make the best you can out of this decrepit situation. Don't give them an inch, because they will take a mile. Let's now talk about today. The Fed submitted over $1.599 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 53% of the total volume today, while dark pool trades for GameStop accounted for 47% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 3% for the day. It began trading pretty bearishly during the early pre-market, consistently below the VWAP. However, as we neared the market opening, it began moving up, having a single candle run from 16.10 to 16.60. Once the market opened, AMC dropped to 15.63 before bouncing up to 16.60 again. It retraced back below the VWAP before continuing upwards, this time finding resistance at 16.50. After reaching this level, AMC was taken down to 15.69. It consolidated for a little while before bouncing strongly to 16.40, where a new resistance wall wouldn't let it move past it. AMC then began dipping, closing at 16.02, below the VWAP. As for what to expect for tomorrow, it is impossible to determine where AMC will trade. So many changing variables with a volatile market make it incredibly difficult to project probability of any kind. AMC continued to get hit hard and its after-hours performance is not suggesting it is poised to break above 16.50 tomorrow. They are going to bleed out AMC as much as possible, so enjoy this extended discount while it lasts. AMC, I would say, is getting the most abuse right now out of all meme stocks. They are getting hammered non-stop without relief. Let's see what happens, and make sure to load up on this bad boy if you like popcorn stock. GameStop traded bearishly, losing under 1% for the day. It began trading very bearishly during the pre-market, going under 96. Once the stock market opened, GME began moving upward over time, eventually reaching 104.93 as the highest point of the day. After this run, GameStop was dragged down all the way to 95.04. It then began moving upwards, closing at 99.79, above the VWAP. Like I said, it is impossible to determine a good structure by which to make any projection based on current estimates. GameStop is a wild stock and I am enjoying the dips below 96, consistently buying small chunks, testing out to see if it is capable of retesting that $86 dip it had yesterday. I have no fear with GameStop, it is a great company and I really its current price. I want to thank all the people who have joined my Discord. We are having a blast right now. I think we are having really fun conversations about what everyone is buying and what they think the price will go to. I want everyone watching my videos to take the extra step and come join us. I will leave the Discord link in the description below. Let me know if you have any questions and what you thought about the video. Let me know if you bought today's dip or if you are waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.